All right, everyone. Good morning and welcome back to the channel. Today, I'm just going to do a quick video just to talk about how to identify when the market, US 30 in particular, is consolidating. All right, how to identify if the US 30 is consolidating. So, one of the first things that you want to do is you always want to make sure that you start from your largest time frame. So in this instance, we're going to go to my monthly time frame. Okay. So now that I'm on my monthly time frame, remember that the market is a structural instrument. Okay. It moves, it trades highs to lows, highs to lows. Okay. So for example, this is on the monthly. So this is my last new structure that was created from a low to a high. Anytime you see a new low, the word low, and you see the word high, it means that the market either just made a new low or it made a new high. Okay. This right here is the structure. Right here is the structure. So I'll just use some rough lines so you can see. This is the structure right here. And this is the structure right here. Okay. This is the new high, the new low. Now, anything within this structure is considered consolidation. Okay, which means the price is bouncing between the last high and the last low. When the price breaks structure, okay, when it actually breaks the new structure, okay, that means that the market is now trending. Okay, so you have a new low, then it went up, it made a new high. That tells you that the structure wants to actually become bullish again. Okay, all right. Then you have your first confirmation, which is your higher low, and then you have your break of that new structure, which is now the higher high. So now you have a trending market. So that's why when you look at the monthly time frame, you know that the market is in fact trending bullish. Okay, it's making higher lows to higher highs, higher lows to higher highs. Okay, that's how you know that the market is in structure. Now, the question that we started off with was, how do we know when the market is consolidating? Now, to understand this, you must understand the types of highs that the market makes and the types of lows. So let's start with our highs. So on your highs, okay, you have first you have a new high, then you have a lower high, and then you have a higher high. Okay, that is for your highs. Now, let's look at your lows. Okay, change this to a red. So let's look at your lows. So on your lows, you're going to have a new low. Then you're going to have higher low. And then you're going to have a lower low. Those are the only three types of lows, three types of highs that the market will make. Okay. So remember, the new low and the new high determines that the market wants to actually make or start a new structure. New high, new low. Okay. The higher high, okay, the higher high tells you that the market is trending towards a bullish structure. Okay. Now, before you have a higher high, you must have a higher low. So every single higher high that the market makes originates from a higher low. All right. So let me just drop down one time frame so you're actually able to see it better. Let me move this out the way so you can see it. All right. So let's go down to like the daily. Okay. So every single higher high that you have starts from a higher low. Every single higher high starts from a higher low. Okay. Likewise, every single lower low starts from a lower high. Every time you see a lower low, the preceding point is going to be coming from a lower high. Okay. Now, why are the higher lows and the lower highs so important? Because lower highs and higher lows are consolidation points. Okay? Lower highs and higher lows are consolidation points. So what you'll find is that your new structure, okay, going back to my monthly time frame, okay, going back to where we were, if the new high signals that the market actually wants to go up, wants to be bullish, and the new low signals that the market wants to be bearish, okay? Whatever happens in between those 2 points is your consolidation point. So using my indicator that I have here, and this again doesn't tell me when to go in, this just helps me to identify what the market is doing. So using my indicator, when I'm looking at this chart, this is the monthly, there's hardly any consolidation that's happening, okay? Anything that's happening on the monthly is that the market is making higher lows to higher highs, okay? So if I go down to my daily time frame, if I drop down to my daily, okay, then you will see a lot more consolidation that's happening, okay? Now, on your daily time frame, you see a lot more consolidation happening, all right? So for example, here, okay, here is a new low and a new high. So let's mark this so you'll see it. So right here, we have a new low, and here we have a new high, okay? Consolidation happens in between these 2 points. So here we go. Let me extend this over so you can see. All right. So here we have it. You have a higher low, which is higher than this last low. And you have a lower high, which is lower than this last high. Although it looks very close, it's actually lower. Okay. All right. So the consolidation happens between the last 2 points. Okay. Now look at what happens. It came here, it broke this higher low to put on a new low. Okay. Came up at a consolidation point because it happened between the last high, last new high, and the last new low. So this is a consolidation point. And then once you had that consolidation point, you had the final break, final confirmation, which now tells you that right now, this particular time frame is in fact in a downtrend. So you have lower highs to lower lows. The only time you can have a confirmed trend is when you have higher lows to higher highs. That's an uptrend. Excuse me, like you have here, higher lows to higher highs. Or if you have lower highs to lower lows, that's a downtrend. If you have higher low, lower high, that's not a trend. That's consolidation. So that is how you know when the market is consolidating. So the lower down you go on your time frames is the more consolidation you're going to begin to see. So if you go to, let's say, for example, a time frame like your 4-hour, okay? Let's bring this up here and you'll see, let's take this line off here. Let's take this line. Come on. Too early for this. All right, here we go. Let's take that off. All right, so if you notice on your 4-hour, there's a lot of consolidation right here. Higher lows, lower highs, higher lows, lower highs. That's consolidation. This was the last high. This was the last low. Okay, price bounced around in between this range. Then you had a new break. Then you had a new break to the high side. So it's still consolidation. Okay, then you had a higher low to a higher high. That's the final break. Okay. Then you came down, you had consolidation here again. This is between the last low and the last high. Okay. You had consolidation right here again. Then you had a new low. Then you had lower highs to lower lows, lower highs to lower lows. So this tells you right now that this particular time frame is trending. Okay. Looking again at your 4-hour, here we go. Lower highs, higher lows. It's currently consolidating. And that tells you basically what you saw on Good Friday, last trading session. Okay. The market did do some consolidation before it actually finally closed on Friday. All right. So that is how you identify consolidation on time frames. You look for the last high, you look for the last low. If price is bouncing in between the last high and the last low, it means it's consolidating on that particular time frame. And that is why you want to always start with your analysis on your largest time frame and work your way down. Because if you start from the left to the right, you're going to start with consolidation points and you're going to miss the master trend that the market is trying to show you. So you always start with your largest time frame, work your way down to your smallest time frame. That way, you'll see the structure and then you're able to identify which time frames are in fact consolidating. All right, so I hope this video was interesting and informative. Like, share, and subscribe for more content, and let's grow together in this trading. Thank you. Have a good day. See you next time. Bye-bye.